What is going on, everyone, and welcome back to the channel. So in today's video, we're going to be going over how to sell covered calls on Robinhood. Now, I really want to take the time to make this video because it's actually something that I just did. So we're going to go over my example of why I sold a covered call on a position that I'm holding in Robinhood. Now, Robinhood's not my main trading account. I hold some money there in cash, and I also have some longer term investments in that account. So it's kind of like a backup savings. If I ever need this money, I can liquidate it right away and take that money out. So it's kind of like, I guess, kind of an emergency fund for me. But at the same time, it's money that if I can use and get a return on that money, I'm going to take advantage of that. So we're going to talk about this example, and we're going to talk about what covered calls actually are, and are they actually a way to make free money? Money isn't free, but let's explain everything here in the computer. All right, so inside the computer, inside the Robinhood account, and here is the stock that we're going to be talking about. It's Spartan Acquisition. So it's actually SPAQ, electric vehicle merging with Fisker coming soon. And so the anticipation for me here is that this stock will appreciate in value. And I've actually been in from the mid 13s is when I actually established my initial position. And so the idea behind this is that I wanted to cap, or I wanted to limit, I guess, my risk in a sense. And so we'll explain how you can write covered calls to do so. So we go to the option chain right here, and we can see that this is where I wrote a covered call. And so it was at the $25 strike price for the expiration date of October 16th. That's why there's a little -1. Now, traditionally, you're going to be looking to buy calls or puts. That's what I talk about in my How to Trade Options on Robinhood video, which if you haven't seen that, highly recommend you go back and check that video out because it's going to be a lot of people have given me some great feedback on how easy it has made them understand options if they don't understand options at all. Now, covered calls and selling options as a whole is like the next step up from just buying. It's actually a lot safer if you understand what's going on and you understand how to do this. So we go to the sell side, and that's what I did yesterday. I sold a $25 call for $175. Now, it's actually trading a little bit lower, which means if I were to do this, I would only get a $163 credit right now versus yesterday where I got a $175 credit to my account. Now, how does this work? And I'm going to explain it very quick, and then we'll kind of dive into some of the questions that you may have. So what happens here is if by this date, this expiration date of October 16th, okay, if this stock is trading at under $25 by the end of the day on that Friday, nothing happens. I keep my 100 shares because I have 100 shares, and you must have 100 shares of the underlying stock to sell a covered call. I keep this, what I sold it for, so I'm going to keep this 175, which actually we can go back here quick, and it's going to show me right here. I'm going to keep this, right now it's at 163, but I sold it for 175, so it shows me that I've made $12, right, or technically on the trade, which don't get caught up in this. I keep that 175, which I already been credited in the account. I keep my 100 shares, and that's it. Nothing happens. Now, if the stock was to be over $25, right, by the end of that time, what's going to happen is now that's in the money, that stock, that option has some value, right? And I'm going to have to give up my 100 shares of SPAQ. But the thing is, that's at that $25 mark. So if I have an average cost of $13.44, that's almost 100% return on my money as of that. So I'm happy with that. If in a month from now, I return 100% on my money, on top of getting this credit, which you get this credit no matter what, you're going to have that money. That money is in my account. So this negative right here, it was negative 175 yesterday, was a credit to me. I got that $175 into my account, but now the stock collateral right here is 100 shares of SPAQ. So this can be given if this option is exercised by the end of this time period, which means if it gets over $25, right, by this date, right, that means that I have to give up my 100 shares. And okay, yes, I lock in my 100% gain pretty much on the shares, and I also capture this little extra $175 kind of credit to my account. That's in a nutshell what selling a covered call is. So some things you must understand is that you must have 100 shares of this stock. Now, if you don't have 100 shares, you can't write a covered call, okay? So this is a great strategy for somebody who really just wants to. Now, the downside here is that you're going to cap your gain. So if this stock was to go to $50, $60, who knows where it could go, right? If it goes that much higher, I capped my gain because I'm only going to capture, it's essentially like putting a sell order at $25, but getting paid to do so, if that makes sense. Now, for me, right, this stock is heavily this is a heavily speculative investment in terms of there's a lot of traders on this, a lot of hype potentially around this industry, electric vehicles, and so that's the reasoning why I'm doing this, and that's why I was able to get such a high premium, at least when I sold this yesterday. Now, the option just became available for this stock, so on a similar stock or on a different stock, you might not be getting as good of a deal as you're kind of getting here. And this, guys, don't worry about these today return, total return. Don't worry about this. It's going to be more confusing, especially for a beginner, because what really is happening here, this negative value, right, as the options or as the time goes on, these option prices are going to change, right? So if the stock keeps going down or if the stock goes down, these values up here are going to go down. The stock starts going up, these values are going to go up generally. There's a lot of other factors, volatility, time, decay, all these other things that go into the option pricing, but that's generally what you need to understand. So all in all here, to write a covered call on Robinhood, you must have 100 shares of the underlying stock you're looking to write a covered call on. And why would you do this? Now, what are some of the downsides? Like I said, the downside is this. Really, there's not much of a downside here in terms of if you want to do this. Now, you're not going to be getting premiums probably as high as I'm getting for this far out of the money on a stock like this. But let's say you want to do it for Apple or for any other stock that you might have. It's a great way to kind of get a credit or pay yourself a dividend on a stock that you're holding. It's really, and it makes it so that you can set the terms of the trade. If you are fine, like for me, 100% trade on this stock on this Robinhood account, which is kind of like a longer term, it's like a backup, kind of a longer term savings account, right, for me. This is fine. If I cap 100% gain in 1 month on this trade, I'm going to take that to the bank. I don't really care. In my other swing trading account, I may be holding for a larger move. That's just kind of the nature of what I'm doing. Now, again, like I said, if the stock never gets to 25 or if it goes down or whatever happens, nothing happens really. I have my 100 shares, and at the same time, I still got paid that $175, and that still is paid to me. That's paid to you once, and that's it. You don't have to worry about that. The only time you really have to worry is that if, okay, the stock price goes above your strike price that you sold it at, and then what's going to happen is you're going to probably lose your 100 shares of the stock. And so that's what you just have to understand going in. So again, hopefully that makes sense. And if you're confused on how options work, the basics of options, make sure you go back and check out my other video on how to trade options on Robinhood. Would highly recommend that for you. It's going to be a great basic starter for someone who is brand new. Make sure you go down below and check out the links. If you don't have Robinhood or Webull, you can get some free stocks with the links I have in the description boxes. And down below, make sure you guys are subscribed so you don't miss any more videos. Hit the thumbs up button if you guys enjoyed this video and it helped you guys out. And I'll see you in the next one. Peace.